We're going to do a quick video on best stocks to buy now, and we're looking at a daily chart of the S&P 500, and we've got this chart up here to get a overall handle on what the market's doing right at the moment. Most stocks, especially most major stocks, are going to rally when the S&P 500 rallies. That is not true of all stocks, and it's not true of all major stocks, but it's a good idea to check and see what the overall market is doing before you contemplate buying any stocks, and especially if they're big ones. And so we can take a look at the S&P 500, which is an index of the 500 top stocks, and we take a look and see what's going on. So the first thing we want to do is take a look at our tools, which are a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average. And this is a daily chart of the S&P 500. We're going to scan back here to get a good idea of what's been going on. You can see right at this point here, approximately May of 2020, we broke to the upside and made a major move above the 200-day moving average. This was our first real signal that we were in a bull market at this time. A bull market obviously means we're going up. A bear market means we're going down. So that would be your first sign to where you could seriously start to look at these and say, hey, I could probably buy some big stocks that are active, that reasonably expected to track the S&P 500 and make some money. You can also see as you look at this that the volatility of the market is relatively low. That means there's a lot of serious buying going on here. You can see just day after day after day after day, it stayed above the 20-day moving average. The 5-day moving average was essentially flat, and people were just buying and loading up on stocks. After we had a significant move from about 3,034 to about 3,500 in the S&P 500 index, you saw your first decent break, right? This was about a 300-point break, and this for most professional traders would have been a buying opportunity. It's tricky for someone who's not aware of what's going on, but you can see we got a bounce before we got to the 200-day moving average. I'll show you the significance of that in a minute, but this bounce indicated there was strength here. It didn't even test the 200-day moving average, which is what you saw it do right here. So we didn't get a test, we didn't get a test here, and we got a higher bottom. So this second one was your real signal, and you can see a lot of people jumped in and started to buy. It got away from itself and sold off a little bit, but still stayed above the 20-day moving average as we came up here. In general, it wasn't perfect, but it respected the 20-day moving average. You had a little sell-off here after we got a rally to about 38.50, and then it started to get a little choppy. This was a big move. As you can see, we were approaching 4,000. When you approach 3,000, 4,000, 5,000, you can expect people to test selling off because they don't think it's going to go through those major numbers. But as you can see, you didn't get much of a sell-off here. You did not make a new bottom here, did not violate here. And so you got some rallies. And this again showed you that the volatility was reduced and it was respecting the 20-day moving average again. These bars getting shorter means the volatility of the daily range is not as great as it was here. So this is just pure buying. People are loading up on stocks. Anytime you get low volatility and a respect of the 20-day and even the 5-day moving average, this is a lot of money flowing into the markets. And as you can see, after a little bit of checking, it just kept pounding down, went right on up to about the 4,500 mark again before we got a decent sell-off. Again, 4,000, 4,500, 3,500, those big numbers are going to be tested. People are nervous and they're not sure it's going to go through. Once we had a check, we again did not violate the 200 and we didn't even test it. So people got right back in. They started buying like crazy again. You had a significant area here under the 5-day moving average and over the 20-day. This is always a sign of strength in the market. And again, you're seeing not tremendously reduced, but slightly reduced volatility. Here's when you started to see real problems. We're now in very rare territory. We're up over the 4,500 mark. People are gambling as to whether or not in their own minds they're thinking is it going to go to 5,000 or not. And this first severe sell-off was your major warning sign that it's not going to go much higher. This, in fact, for the first time in this rally, tested the 200-day moving average, violated it, closed below it significantly with extreme volatility, and then you see the volatility just basically stay extreme for quite a long time. From this point here, about January of 22, all the way over to about here of April of 22, we were essentially in a sideways market oscillating around 43.80. Again, we went back and forth oscillating not only around 43.80, but significantly closing above and below the 200-day moving average, which you can now see is going flat. We got some severe sell-offs here, and we also got the beginnings of a 20-day moving average rolling over significantly, along with the 5-day, and we're all below the 200-day move. All this action is below the 200-day moving average. This is a bear market. So it's a classic bear market, and you can see you got the sell-off down here initially to 38, a little rally, and then down here to 36. So the question is, what are the best stocks to buy now, and should you even be buying stocks now? Well, that question was answered here. As you can see, we got a bottom, a test of a bottom, and then we got a good crossover of the 5 over the 20, and the 20 is turned back up. From here to here was a pretty good give and test. So from 38.50 to 43-ish, that was a good test, and that would have been the place to buy. The question is, should you buy here? And the answer is, there's really no way to tell. My best guess is you're going to see more of this sideways action right here. You're not going to probably see this kind of volatility. Your volatility will probably be half of this. So this was about, let's just call it 4,100 to 4,600. So to make it easy, let's call it 500-point volatility. I would expect to see about a 200 to 250-point volatility range here, say from around here, this 41, even here, this 41, 25-ish to up here. Not anywhere near this kind of volatility back here. I would say about a 250-point volatility across here until this market makes a decision. Are we going to go higher or not? There's a lot of things going on fundamentally here with interest rates and so forth, but I think you're going to get some choppiness from this point right here, where I'm talking to you August 16th, probably until October, late October, third week in October, because this market's going to have to test this 200-day moving average and decide if it's going to make a reversal and go down, or a strong close above and continue to rally. My best guess is you're going to get a test here, and you're probably going to sell off to this range right here in early October. You're probably going to get some tests across here, and then a sell-off down to probably the $3,900 range, 3,900 range in the S&P, maybe the 4,000 range in the S&P around late September, early October. That would be my best guess. You may get a little sooner, and then you might get a rally up over, depending on what goes on with interest rates and the economy in general. So that's my best guess for you right now as far as these indexes go. Again, we're looking at the index first to get an idea, should we buy stocks? It's dangerous to buy stocks here. It may be dangerous to buy stocks at a test of the 200, but it's obviously much safer to buy stocks when the S&P is rallying than when it's declining. Doesn't apply to all stocks. We're talking about the broad market, the broad health of the market. So right now I would describe the health of the market as neutral for the next month or so minimum, until we see if we're going to break through this 200-day moving average. Let's take a look and see what RBAM Research does. We put out algorithmically generated entry prices every day before 7 a.m. for 190 plus stocks. These are for tomorrow, the 17th of August. I'm recording this the evening before on the 16th. And you can see we have Apple and Tesla and so forth. We have 1-day hold, 5-day hold, 20-day holds here. That basically means you get in this case, you would get in tomorrow and hold for 1 day. If you got a loss, you'd take it at the end of the first whole trading day. So if you got in today, you'd close out tomorrow night at a loss if you before the market closed if you had a loss, or you take your profit as soon as you got it. Same thing with a 5-day, buy today, close out 5 trading days later, buy today, close out 20 days later. And again, they're all trading days. So that's what RBAM Research does. We give you exact entry prices, and if we have no price at all, that means we think the market's weak and you shouldn't buy that day. These are for entertainment purposes only. They're all our opinion, and you never should use them, rely on them for anything other than entertainment, but they back up your own research, and they give you an idea of an objective way of looking at the market. Again, we have 190 of these. If it's zero, we don't have any buy price for you that day. You can see for tomorrow we have $16 here for Ford, and so on as you go down the line. There's 190 of these. You can get these for absolutely no cost. They're put out every morning before 7 a.m. No credit card required at rbamresearch.com. That's rbamresearch.com. We cover 190 stocks. We cover the major forex pairs. We cover crypto, BTC, and the most liquid futures. Everything but the stocks, we have long and shorts. The stocks we have currently just long prices. Again, before 7 a.m., Monday through Friday, rbamresearch.com. Just follow the link in the description. Sign up, absolutely free, no credit card required. If you like what you see, click the like button. If you like to subscribe, please do that. If you have any comments on helping us make this better, please leave them in the comment section below. And everything I've said, all the entry prices we offer are for entertainment purposes only. They're all our opinion, and you definitely trade at your own risk.